Back in the early 2000s, the tech industry saw the rapid growth and then subsequent rapid decline of hundreds of companies that attempted to take their businesses online. The dot-com bubble. Massive companies like Pets.com became classic examples of dot-coms which were high on hype but light on business fundamentals, specifically a way to make money and sustain growth. Today, social media is all the rage. In fact, venture capital funding is now above pre-2008 market collapse levels. The return of venture capital in itself is hardly a bad sign. What does have many worried are the valuations. A look at the current IPO landscape shows quite a large gap between projected revenue and the market valuation attached to some of the hottest companies in tech. And many technology companies on the rise who are planning IPOs of their own have projections at similar levels. LinkedIn is trading at 750 times forward earnings, while the rest of the market only trades around 12 times. When you compare that to Grocery.com Webvan that was valued at $1.2 billion in mid-2000 with solid plans for expansion and out of business by July 2001, it's understandable that some experts are a bit worried. But are the current astronomical valuations even clear indicators of another bubble? After all, while many of the dot-coms went bust in the last tech bubble, some of the companies that grew fast did not and have become giants. When looking at the NASDAQ, a broad index of technology stocks, the current upward trend certainly mirrors the early rise of tech businesses in the late 90s, but that dot-com bubble rose much higher than where we are now. And a look at where the NASDAQ stabilized after the bubble burst back then suggests that we might still be below overvaluation levels. Of course, that doesn't mean that all tech companies are great deals. So perhaps before you click buy on your online trading site, call up someone who bought Pets.com stock back in the day. If the bubble does burst, you might get saved from financial pain by heeding their advice. For example, don't trust a company with a sock puppet as a spokesperson.